Welcome back to Dinar Community, your trusted source for breaking developments in global currency markets. Today marks a truly historic milestone in the world of foreign exchange as the combined valuation of the Iraqi Dinar IQD and Vietnamese Dong VND has skyrocketed beyond the $8 mark, sending shockwaves through the international financial community. What many analysts once deemed highly unlikely has now materialized, captivating the attention of institutional traders, retail investors, and global market observers alike. Live data pulled from top trading centers, including New York, London, Frankfurt, Dubai, and Singapore, confirms this extraordinary movement. Bloomberg and Reuters terminals now reflect real-time values of the IQD at $4.12 and the VND at $3.98, combining for an astonishing $8.10 rate. As market automation systems failed to keep pace with the sudden uptick, institutional trading desks around the world were forced to suspend preset sell orders, citing activity far outside algorithmic expectations. For seasoned holders of these currencies, what was once dismissed as wishful thinking has now become a tangible and highly profitable reality. Online investor forums and social media platforms, from Telegram to X, formerly Twitter, Discord, and private hedge fund chat rooms, have exploded with excitement. Screenshots of successful trades, account balance confirmations, and emotional stories are circulating rapidly, giving a voice to a community that has waited years for this moment. Driving forces behind the revaluation. Several key developments are believed to be driving this incredible surge. Iraq's improving geopolitical climate and renewed regional cooperation have lent strength to the IQD. The Central Bank of Iraq recently enacted sweeping changes to foreign reserve policies, now bolstered by oil-backed guarantees and increased gold holdings. In Vietnam, 3 consecutive quarters of export surpluses exceeding IMF projections have strengthened the VND's fundamentals. Leaked documents from insiders at HSBC and Wells Fargo reveal long-standing preparations for this revaluation, including confidential rate portfolios and pegging mechanisms. Furthermore, sovereign wealth funds from Singapore, the Gulf, and Hong Kong have been heavily increasing their holdings in both IQD and VND, sparking even greater momentum. High net worth clients and major hedge funds are swiftly reshaping their portfolios in response. Analysts no longer view this as a speculative spike, but rather the start of a long-term currency reset, built on structural economic changes and geopolitical progress. A new contender, the Zimbabwean Dollar, ZWL. While IQD and VND steal the spotlight, whispers are growing louder about a potential breakout for the Zimbabwean Dollar, ZWL. Once crippled by inflation and policy failure, Zimbabwe is now reportedly undergoing quiet reform efforts in collaboration with IMF advisors. Investment firms have discreetly accumulated ZWL over the past quarter, viewing it as a sleeper asset with explosive potential. The Reserve Bank of Zimbabwe (RBZ) is said to be working on a regional currency alignment, potentially linking with the South African rand, and new transparency efforts, including bi-weekly reserve reporting and inflation tools, have begun restoring credibility. European, Asian, and Gulf banks are reportedly testing back-end ZWL processing in anticipation of future activation. If reforms continue on schedule, Zimbabwe could soon join Iraq and Vietnam in what could be a historic 3-currency revaluation wave by late 2025. From speculation to strategic wealth. With confirmation pouring in from top data sources, the revaluation has gone mainstream, pulling in even those who once doubted. For retail holders across North America, Europe, and the Gulf, the conversation has now shifted, not if, but what to do next. Veteran traders urge caution amid the euphoria. Though the movement is real, volatility may follow. The coming 48 to 72 hours will be pivotal as institutional players adjust and central banks assess impacts. Still, FOMO, fear of missing out, is pushing many to act quickly, particularly in Australia, Canada, and Southeast Asia, leading to rising liquidity concerns and tighter Forex spreads. In the U.S., major institutions like Chase Bank, Wells Fargo, and Citibank have now activated restricted foreign exchange access for IQD and VND redemptions, limited to pre-approved clients. Capital One has launched system tests for high-value transactions, and HSBC is mobilizing international branches to accommodate priority clients. TD Bank in Canada is now running an appointment-only system to manage overwhelming demand, while private redemption centers in U.S. cities such as Los Angeles, Houston, Dallas, Phoenix, Atlanta, and Orlando are now operating under strict scheduling protocols. Online platforms and mobile apps are also streamlining appointment systems for authenticated note holders who can verify tax and source of funds documentation. Global oversight and legal precautions. As this revaluation reshapes markets, global regulatory agencies are stepping in. In the U.S., the IRS and FinCEN have reissued warnings. Currency exchanges over $10,000 must be reported via Form 8300. Incomplete documentation could result in audits, asset freezes, or penalties, especially if funds are later used for large purchases like real estate or securities. The EU, Australia, and New Zealand are also tightening controls, particularly on unlicensed platforms offering speculative swaps, prompting early investigations and enforcement actions. Financial professionals are now strongly urging currency holders to seek qualified legal and tax guidance before initiating large-scale exchanges. Zimbabwe rising. The next frontier. Adding fuel to the ZWL narrative, Zimbabwe recently inked a multi-billion-dollar lithium export deal with China, significantly boosting its foreign reserves. The RBZ's improved reporting transparency and ongoing talks with the IMF mark a turning point for the currency's reputation. Insiders reveal that select global banks have begun limited ZWL system tests, and discussions are growing around a potential peg to the South African rand. If implemented, this could stabilize regional trade and pave the way for ZWL's reintroduction into international circulation. Market chatter suggests an initial ZWL exchange value could land between 3 cents and 30 cents, depending on the pace of reform and regulatory approval. A financial turning point. What began as quiet speculation among niche Forex communities has now become a defining moment in global financial history. The IQD and VND revaluation validates the foresight of holders who endured ridicule and doubt. With the movement now confirmed by Bloomberg, Reuters, and institutional data, the global financial world can no longer ignore it. Still, opportunity brings responsibility. Investors must remain vigilant, keep documentation airtight, follow tax laws, and resist emotional decisions. And as Zimbabwe edges toward joining this financial transformation, the idea of a tri-currency revaluation event is no longer fantasy, it's becoming a probability. For those who stayed the course, avoided misinformation, and planned wisely, this may be the beginning of a generational financial shift. In finance, as in life, fortune favors the prepared. Like and subscribe for more videos.